Hello YouTube, welcome to the Common Investor. I'm pretty much overdue portfolio update, so I'm just going to do this one real quick. So I'm not going to talk too much about the stocks, but essentially I've maxed out my ISA. As you can see, 99%. So I've deposited pretty much 20k in there. So I'm done for the year within my ISA. The reason for this is I've actually transferred a lot of money from my free trade. I sold stocks in my free trade and transferred the funds to here, and I've also transferred some into my own personal account. I think free trade overall for the year probably made like £1,000 essentially. I've still got some stocks in free trade, but yeah, we'll talk about that later. I'm just waiting for them to get into the green, then I'll sell them off. So yeah, so as of today, I'm up £1,000 essentially, which is 5.49%. It doesn't seem like a lot considering the way the market is, but really is because someone said I'm pretty much over diversified, but I don't really see it that way. I just kind of see it as myself. I see it as I'm treating each of the pies as an ETF essentially. So rather than having actual ETFs in there, I just focus. I obviously pick the stocks I like and put it within a pie, and basically just consider that an ETF. Obviously, I have my own. I have some ETFs within this as well. Um, yeah. So I'm just gonna go through it. So this is my the first one here. This is my UK dividend portfolio, which I call it the fire portfolio because essentially that's what it is basically. If you look at the portfolio as well, it's geared towards dividends, because most of the money essentially is in is in dividend paying stocks. Um, so yeah, essentially we've got UK dividend paying stocks. Right now I am up 0.56%, which is not too bad considering the UK market's not really doing too well, right? I've been paid so far within this portfolio about £10 worth of about £10 to £11 worth of dividends, and I've reinvested every single thing. Some I've reinvested in this portfolio, and some of them are reinvested in some growth stocks as well. Um, well, basically just reinvested everything. So, next one is the US growth stocks, US dividend stocks. Sorry. So this is valued at around £4,000 right now. I'm up 2.73%. I don't know if you want to have a look at the holdings, but say the two biggest holdings are Microsoft and Apple. And yeah, I added AppV today. I had it in my free trade account, sold that off, and transferred it here essentially. So it's dropped a bit, so I thought I better as well add some shares of AppV. But yeah, I've got 21 holdings in this one. In my UK one, I've got 29. I'm going to reduce this for sure. You know, if someone was to ask me like within this pie, it was what's one stock would I be happy in investing in, and forget all the other stocks. That'll be Intertech. Um, it was a dividend growth stock that I was happiest with. But obviously, this is something I want to be paying me like every like I wanted to get to a stage where I probably get paid pretty much every month, and this portfolio allows me to do that. Um, Initially, I wasn't planning on having a US dividend paying portfolio, um, but yeah, I basically just changed my mind. So now I have a US and UK because I was kind of thinking about the tax I would have to pay, but the thing is, US stocks basically pay higher dividends as well. So and they're some pretty good quality stocks. And essentially, I don't want to say the UK market is dead, but from a dividend point of view, especially after the announcement from what's his name, Yeah, from the guy on one of these politicians. I can't remember what his name is. So we made an announcement saying, if companies, UK companies, want to get help from the government, that they basically can pay schemes and they can do some other things. They can pay dividends, sorry, and they can do some other things as well. So it's not dead per se. I mean, but I feel like UK market is gonna stall basically. At least maybe probably till after Brexit. Then we'll see how things go. US markets obviously it's the jewel of the stock market, and it's basically doing pretty well. Next is the my REITs. Plan to take this up to like 50K. These are the ones want to try and take them up to 100K. So REITs I'm up 2.41%. I've only received 27 pence from this. I think that was from what was that from? Can't remember what that was from. I've had quite a few dividend payments. Obviously, I have quite a few dividend stocks now. So yeah, I'm not gonna go through that. I can't remember. I've got 27 pence in this. And you want to have a look at the holdings. I've got Store Capital, Realty Income, Prologis, Public Storage. So the top four are doing pretty well. And you got the American Tower, which we doing. I'm pretty sure all of these will do well. The UK ones, just Tritax and Segro. Segro, I think, is just kind of lagging behind. I think that'll catch up. Tritax, I think that should catch up as well, but I don't think the UK ones are just gonna do. They're not gonna do as well as the US ones. But Store Capital, obviously the portfolio is geared towards Store Capital, which has the highest holdings in there. So yeah, I'm kind of really diversified as well, but I do tend to focus more on some certain stocks than others. ETF up 8.34%, and the holdings are I tell you this, right, this iShare Global Clean Energy is done really well. Literally it's almost on. It's I think in the past year, yeah, it's probably done it's done 100%, mate, in the past year, and I've made quite a bit of money from this because I had it before I sold it off and I bought back into it again. So yeah, this has been doing really well. Obviously, the whole clean energy movement and all that stuff, and I think it's one of the few, I guess, global clean energy ETFs. So that one's doing pretty well. Scottish Mortgage Investment Trust, that's doing pretty well as well. S&P 500 Information Technology ETF. So that is the it's not geared to it has the highest amount of money invested in that ETF, but that was just basically because the S&P 500 Information Technology ETF fell the most. So this was basically in the negative, and I just put all I knew it was going to recover. So I just kind of put money in there essentially. And you got your Vanguard FTSE emerging markets, which is doing pretty well as well. And you just got the emerging market bonds, which has £98 in it. But yeah, the global clean energy one is doing pretty well. It's almost 20%. So that's quite nice. Then you have the outsmart the Nasdaq, outsmart Nasdaq Pi, which is I would say is actually doing better than the Nasdaq, to be honest with you. So I got like Roku, CrowdStrike is up 22%. Got Square. Okay, Adian is not in the Nasdaq, but it's not a dividend paying stock. We just included it in here. 18%. Got Tesla as well, up 13%. Or Trade Desk. Amazon, the whole shebang. But everything's pretty much green apart from Google or Alphabet, and that's gonna go green at some point. So that's looking good. So yeah, up 10.55% as well. Yeah. So yes, I mean I could have easily kind of put money in like CrowdStrike or probably Aidin, and but I like it this way. I definitely like it this way. I like it this way. Um, I feel a bit gutted sometimes in the sense that I could have a lot more from a return point of view. But this is the strategy I want to use for this. And if anything goes down, then I buy more into that. I don't really plan on changing and chopping this that much. Just literally just going to be the stocks that are there. I think I used to have about 104 stocks. I've reduced it to like 93. So I want to try and get it to like maybe like a 80. Definitely the UK one is gonna drop. I think there's too many there, so I might probably get rid of 9 from the UK. I don't think the US is gonna drop. It's gonna change. The REIT's not gonna change. ETF is ETF. The S&P 500 information technology might actually go. If I feel like I need some money to invest in other stocks, um, just mainly because essentially most of the stocks in here I already have already. So, you know, um, I don't see the need to really have it. This is just a way of, I guess, storing money for myself, in case I want to deploy it somewhere else. Um, so yeah, that's my. Now we talked about that one. The last one is the speculation bits, and there's a high risk, high reward, guys. It's got the least money, but that's because it's a speculation play. But it's got the greatest capital appreciation. Uh, so yeah, I kind of call this the kids one as well. I don't know if that's really right or wrong, but um, yeah. So I've got Fastlane here. Essentially, I think most of the stuff in here are probably companies that really aren't making profits, or really real speculative companies like Workhorse, or Foreign Merger, or Series Power Holdings, those kind of companies. Or maybe it could just be ones that are really hyped up in YouTube, because whether you believe it or not, YouTube makes the market move. To be honest with you, especially for the Workhorse, like there's a lot of hype about Workhorse, and I bought this a while ago, which is why I'm up £42 for Workhorse, because it's actually dropped quite a bit in the last couple of days. But yeah, I've got Fastly, Cloudflare, Plug Power, Workhorse, Foreign Merger. That's a YouTube play as well. Series Power Holdings, Invite, Blink Charging, it's doing really, really well. Really, really well. That's just an EV play. Dated Dog, that's doing pretty well as well. Smile Direct Club, doing pretty well. 27%. So yeah, these are doing pretty well actually. Upwork as well is doing pretty well. So I got Dropbox. Dropbox is actually a company I believe in. I believe in greatly. Yeah, but it's just not a stock that people love. They do have. They make a good profit. They have a lot of money. Yeah, it's just a just a stock that people don't like. I don't know. It's a good company. Have good fundamentals. It's a very the company's not going to go anywhere. During this pandemic, it's a very safe company to invest in, but people just don't like it. I think it's a case where you just don't see the future of the company. That's what it is. Um, and then you got this just the Nokia is a play on 5G essentially. Um, yeah, I think Sony Ericsson. No, sorry, Ericsson is actually doing a lot better than Nokia from a capital stock price appreciation point of view. But um, yeah, um, we'll just wait and see. Because Nokia has secured a very big deal actually in the UK for the BT. They secured a 5G deal with BT to supply BT. I don't know if they got the whole deal or they got 60. They got a good chunk of it. to supply BT with 5G equipment essentially. So the stock went up about 3% on that announcement, but it's gone back down again. So yeah, that's a speculative bit. Obviously, it's doing pretty well. It's 19.51%. So, I mean, all things considered, considering I started and I pretty much started this pie or this ISA it was in April. So pretty much after the market had after the V-shaped recovery had taken place. Uh, so considering that, it's not doing too bad, I guess. I just hope that there's not a full-on crash around the corner. Um, so over here, you could probably see I've got invested 18,000 or pretty much 19,000. Reason for that, I took some money out to do some other stuff at the time, but which I don't plan to do that anymore. And we just kind of leave this and see where it goes essentially. Um, yeah, that's it for this portfolio. Just gonna take you to the trading to want to invest. So this is where you see like the concentration strategy. So I've only got 4 stocks here, right? Um, 4 stocks which I'm just concentrating on. And what you see, it's literally that's the difference. It's up 6%, just because it's so concentrated. Uh, I'm getting better value for my money or better return on my money invested, just because it's so concentrated. And obviously they're doing pretty well as well. So you got new technologies. Essentially, they're an electric bike maker. They had a big jump today, about 11% today. I've kind of been buying into them as they dropped, because they dropped quite a bit. Dropped about just under $18. So I was still buying at that point. I was able to reduce my cost basis to 19.69. The company I believe in, that is a growth company. I believe they're gonna have a good quarter, a good next quarter, especially since you know, especially if we don't have a lockdown. And I think in China, essentially, they're doing pretty well, and they seem to have everything under control. And most of their sales at the moment come from the Far East, so they should have pretty good numbers. But obviously, they sell the bikes all over the world, and they're quite nice as well. Um, so that's a good company for me. Obviously, Scottish Mortgage Investment Trust. If someone wants to ask me what ETF I want to put my money in right now, or what fund or trust, there's Scottish Mortgage Investment Trust. So I could just put my money in there and let it be. I think it will be alright. Taiwan Semiconductor, I got this at a pretty high price actually. But considering, obviously the fact that they make, semiconductors for AMD, they work with Nvidia and everyone else. And with the PlayStation and PS4, PlayStation 5 and Xbox, I'm guessing it's One Series maybe, or the new Xbox anyways, coming out, that should be pretty good for Taiwan Semiconductor. And obviously they pay a dividend as well, so yeah, uh, it's 2.17 yield, so that's pretty good. And obviously the good old Tesla. Um, yeah, those just wanted to buy into it, to be honest with you. And keep in mind, anytime I basically invest in Scottish Mortgage Investment Trust, in my mind, I feel like I'm investing in Tesla, because Tesla, in the actual trust itself, Tesla is the highest holding. I think they have Tesla to about 13%, compared to all the other stocks within the trust. So if Tesla moves, this moves, essentially. If Tesla drops, this drops. So yeah, that's pretty much it. It's been I think it's just this is something that's still going high. I think it's been a pretty good day for the stock market. I never believed September was 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 jinxed, for the stock market. They were saying September is always like one of the bad months in the year for the stock market, and lo and behold, it was actually a bad month. I don't understand why. Um, but yeah, I never knew that, but I think probably next year I will kind of I will hold myself from investing in September. I just see the market crashes again, and I'll try and pick up a couple more shares. So yeah, that's it for me. It's just a quick one, just to talk to you through my portfolio and see where I'm at. So hope everyone's good and be safe.